Hello, guys. What is happening? And welcome to this live stream. So, it's been a bit of a mess. The computer froze, just black screen, everything like that. And I'm so sorry for being late. And I was trying to order some currency online and it just turned into an absolute mess. But anyway, let me just get acquainted here and I'll share my screen and then we'll go through this stuff. So let me get rid of that. And let's bring in share screen. Okay, this is it. All right, guys. So first of all, can you hear me? The inflation rate for Canada is 6%, just under 6%. So basically, guys, these articles. There's two articles that I want to go through you, and it's obviously a drum that I've been banging since I started this channel, which is pretty much that an economy that relies on immigrants so much, we'll see a lot of them leave when the cost of living spikes substantially, or you have a recession, or any of these different things. So obviously the cerveza sickness impacted things massively. And we're going to go over some data actually from the government themselves admitting that Canada has one of the lowest birth rates in the world and has a problem. And the funny thing is, you can't solve that problem bringing people in, because you have to be a good country in order to attract the highly skilled workers. It's not as like a lot of people just think, oh, if we just open up to everybody, we would suddenly have a vibrating economy. Well, it doesn't work like that. That's why different countries have skilled immigration categories and everything like that. So the thing that's happened is over time, over the past 7 years, we've seen the standards required to emigrate to Canada drop and loosen, the standards for citizenship loosen, and the standards for permanent residency loosen. And all of these things have been loosened, all in an effort to attract more people over here. But the problem is, in doing so, Canada has sold out its own citizens. It's sold out everybody who lives here, because essentially, to prop up this narrative, they aren't dealing with any of the problems they've got locally. And really, they should be looking at the problems they have here locally, addressing those first. One of the things is an extremely low birth rate. Why is that? We'll get into that. But okay, so this, what the hell am I doing? There we go. Okay, so 1 in 5 new Canadians are considering leaving. Cost of living a major factor. So basically inflation, guys, inflation. So Canada builds, I think, builds itself, I think they meant, but I don't know, maybe I'm wrong there. Canada builds itself as an immigration hub, but more immigrants are unhappy after arriving. A new Liga survey conducted on behalf of ICC shows the cost of living is becoming a big deterrent. That's the number one challenge Canadians see weighing on future immigration. It's become so bad. Over 1 in 5 new Canadians are considering moving to a new country within the next 2 years, like myself right here. The thing is, when you take in a lot of immigrants, the thing that you have to remember is these people have moved away from their home country, like myself. So we really have no ties to Canada in that sort of sense. So if you're young like we are and you don't have children, it's very easy to just leave. That's exactly what a lot of people are going to do. Now, there's going to be way better opportunities in other parts. And this is a theme that I've seen rippling out across my friends and different people who've contacted me through YouTube who are leaving Canada. And it's really, really interesting, because I was shocked when this is like a personal story, but one of my friends here in Calgary, he basically packed up and went back to England. But what surprised me was he had 2 kids, and, you know, like, they were born here. So they've been here a long, long time, and they packed up, went back to England. Now, I'm not saying England is better than Canada, because really they're similar in so many different ways, and there's trade-offs to both, but, you know, it depends what you really want. They're very similar. But if you're moving to somewhere like the US, there could be more opportunity. Dubai, Abu Dhabi, I think there's a lot of opportunity. Like, a lot of people that we've met in Calgary have left and gone to Dubai. I know several people that have gone over the past couple of years. So Dubai has been attracting a load of people. Obviously, good weather, no taxes, you know, and the salaries are on the whole higher than here. So, and the cost of living as well, even though it was high, the property prices have come down, rents have come down in Dubai, and it's significantly cheaper than Toronto or Vancouver or even Calgary now. It's quite insane. So this is only just going to get worse, and we're just the tip of the iceberg, because when these trends start to form, these are long-term trends. So we talk about cycles and everything going around. Like, an inflation cycle is typically 10 years if you look at past data. So the chances of it being 2 years are just very, very low. Now, whether the CPI measures different levels is a different case, but I'm actually talking about real world inflation that you and me see. And even if you look over the past 5-6 years, it's been extremely elevated in the US and Canada. So, and New Zealand is struggling with these problems too. So is Australia, because they've also just become these credit-based economies with massive asset bubbles, and they're basically coming to the end of the trend. The train, it doesn't matter what trend you're in, eventually the train is going to come to the end of the line and it's going to have to go backwards, and that trend reverses. The problem is people have this recency bias, where they think, oh, it's been like this for 10 years. It's been low interest rates for 20 years. So that's just going to continue. And if we have a recession, they'll just lower rates, fire up the money printing presses, and we'll be all good to go. Well, number one, that didn't work in 2008 in propping up asset bubbles. So it depends on the situation. And number two, when you've got rapidly high inflation, real world inflation, I just don't see them doing that. So that's just my 2 cents anyways. But let's go back to this. So Canadians are generally detached from reality when it comes to immigration. Yeah, I totally agree. You know, the amount of people that say immigration is a cause for the housing boom. Well, get this. Calgary and Edmonton, they have actually grown more in population percentage in terms of immigrants than places like Toronto and Mississauga. So that actually means the population of like Calgary has actually grown with more immigrants than places like Toronto as a percentage as places like Toronto. Now, obviously, Toronto is a bigger city, so it's going to be higher numbers because the population is higher. But I'm talking about as a percentage of the population. So, and that kind of gives you an idea of new home supply, everything like that. And that hasn't stopped housing prices going down here before. So it's ludicrous. People think immigrants come with bags of money, and it's just not the case. You see them, you know, most of them, unfortunately, are working low skill jobs, and that's just the reality that we see every day. Take an Uber, you got 75% chance it's going to be an immigrant. Go to the grocery store, 75% chance it's going to be an immigrant. Like, you go to these low income housing that I've been to all over Toronto, most of them are immigrants and elderly people. So it's just the way it is. So anyway, the survey found 54% of people don't understand the challenges immigrants face. Yeah, I agree with that. They think they're coming with bags of money, and they're far from it. When new Canadians were asked the same question, 72% felt Canadians don't understand their challenges if Canadians don't understand what immigrants need, they risk ignoring their needs. It becomes hard to attract people if you're going to ignore the challenges they face. It's even more difficult to keep those with the highest level of mobility. And, you know, it all comes back to when I was speaking to my friend who's an immigration consultant, and he was in Poland or Hungary or one of the places, and they were basically saying there that a lot of the people from Ukraine didn't want to come to Canada. They knew it was too expensive, didn't want to come here. Too far, too expensive, not interested. I'd rather go to Germany or somewhere like that. So they know the struggles. Everybody has a smartphone. This isn't like 2000 and the 1990s where the government could put out its propaganda around the world and then people could just, you know, not see it for what it is. People see it for what it is. And not only that, Canada is a dictatorship now. And a lot of people are seeing that. The way that's been reported internationally and the way Trudeau is viewed internationally now has gone off a cliff since everything happened with the Emergency Act. So, and it's going to be really interesting, guys, because we fly to England tomorrow. And I can't wait to speak to my friends and see what they have heard or know about Canada, because they don't even know I have a YouTube channel or anything like that. So it'll be interesting to see from their perspective what they think of what's going on in Canada. Like, what has the news told them? And that's what I always say. Don't put your point of view forward first. Always try and get other people's point of view first, because if you put yours out first, you're more likely to influence them. So you get that more genuine answer if you just asking them questions and digging in. And that's what I'm kind of sad. I like to do that, I guess. Read too many psychology books, got one to read for the plane. New Zealand and Australia have been relying on this factor to spread deflation in the tradable goods sector and services sector. Low-skilled immigrants keep Canadians' wages low. Yeah, you're exactly right. And it's the same in the UK because they used EU. Well, they didn't use them. They came to the UK, let's face it. But the European immigrants that came when the borders were just open were mostly low skilled. So this was one of the things that affected the truck driver shortage in England that happened during this cerveza sickness, was because all the rules changed and a lot of those went back and worked in Europe. They didn't stay in the UK. All of a sudden, these firms, logistics companies, had to raise the rates that they're paying for drivers, and all the different things started coming up. Like, there's no services for them to park up and sleep. And anyways, I could get down a rabbit hole with that. So Canada's general population underestimates the impact of high living costs have on immigration. Less than a third, 31%, feel a high cost of living would prevent immigrants from staying in Canada. New Canadians feel very different, with the majority, 64%, feeling a high cost of living is an issue. A bit at odds with the investment thesis on immigration maintaining high levels despite the cost of living. And it's so funny because humans, they just act in patterns like every time. Like, you know, it seems at the end of every cycle, you have this mad rush into the market, like even in the stock market, be it the real estate market, and it's all just based on myth or lies or a facade. And but it's the same, like it almost has to have that final stage of mania, which is why I named this channel Market Mania, at the end. So it's kind of interesting. Oh, and if the guy from the liquor store is in the live stream today, let me know in the chat. I was talking to this guy at the liquor store, and he was saying, I don't think something's right with the real estate market. And I said, hey, you should look at my channel then. It's quite funny, and he subscribed to it. Okay. So, and then it basically shows about recent immigrants and the percentages. The response by age shows younger immigrants are the ones that see the cost of living as a problem, which is even worse because Canada has an aging population and the birth rate. Just wait until you see what the government has to say about the birth rate, because even they admit it, like Canada has one of the lowest birth rates. So they know, they're just not doing anything about it. They're trying to fill it up with immigrants. And I can't believe people aren't opposed to immigration here more, because they aren't solving the problems that are happening here. But I suppose it gets to a point where the scales kind of tip. And I think we are getting to that point now where the scales are kind of tipping. And I have nothing against immigrants. I'm an immigrant, obviously, but I just see it from a Canadian's perspective, and that's the way. So about 75% of new Canadians between 18 and 34 felt cost of living would slow future immigration. Middle-aged Canadians, 34 to 44, 67%. And it goes down on a sliding scale. And you know why that is? Because the older people probably own real estate, because when they came, it was typically cheaper. So the chances are they don't see the cost of living as that much a problem, maybe as much, because they have like a fixed mortgage payment. They bought their house for so little and now it's worth so much. And they probably think it's all immigration. It's all driven by immigration, when it's more speculation of immigration that is causing it. It's like, it's just crazy. And then a lot of new Canadians are considering leaving the country within 2 years. The survey found 22%, 1/5 of new Canadians are considering leaving within 2 years. Another 21% were neutral and undecided how they currently feel. That is huge, staggering numbers. Really is. Like, that is staggering numbers. I saw the $10 a day childcare. That's great. That'll just be terrible for inflation. That is just like, I mean, it's just more inflation, more deficit spending. Like, the government of Turkey. I mean, Canada. Canada is a nation of immigrants. And one of the stories we tell ourselves is that we are welcoming to new immigrants, wherever they may be from, says ICC CEO Daniel Bernard. But while this may be generally true, new survey data points to the fact that many new Canadians are having a crisis of confidence in Canada, and that should be ringing alarm bells all over Ottawa. Should be, is it? That's, a contention or debate, but yeah, it's interesting. And then we're going to go through this article as well, because this survey comes after an unusual surge of Canadians leaving the country permanently. Emigration, severing your residency ties, reported the biggest Q4 since 1974, with the OECD forecasting Canada will see the slowest growth of any advanced economy for the next 40 years. So for all those real estate bulls out there, just look at that. I mean, yeah, you might have stagflation for 40 years where that price of the house doesn't go up, just stays flat, but everything else goes parabolic upwards. But there is quite a few weights on immigration. Canada's global reputation as an attractive immigration hub with opportunity is built largely on its past results. The current wave of immigrants are starting to find the place that earned the reputation. Very different from the current environment. I couldn't agree more with that article. As an immigrant myself, I think that perfectly puts it into perspective. And I think this is just the start of a trend. I really do think, and I've said it before, guys, I don't just think this will be a recession that's over. I think Canada is in for a lost decade or even two, like Japan. I think Canada is struggling and is finding the same problems that Japan had in the 70s or the 80s or the 90s. I think it was in the 90s, I can't remember. But yeah, when they had their lost decade. And they're still struggling to this day to deal with that. So that just goes to show you, the thing is, you can't just put band-aids on problems and hope they heal themselves. You've actually got to do something about it. And that's really what's lacking here. So it's, yeah, so let's see what you guys are saying in the chat. Smoking gun, yeah, it is. Trent in the chat. Yeah, you're right. I used to spend $75 on designer blue jeans back in the 80s. Just bought a pair of jeans for $16.99 from Costco yesterday. Total joke. I don't think AUS, I don't think it will rebound at all. Housing, vehicles, and fuel costs, on the other hand, total joke. New house in Vancouver in the 80s was 150, 200K. Now it's 1.5 million. And that is the expansion of credit. And the funny thing is about that, we're about to see for the first time in the past 20 years, if they get to it, quantitative tightening, which is literally the opposite of what we've seen since that date in the, no, not in the 80s. It was in the 80s you're on about. But since the 2000s, since the 90s, essentially, this whole MMT, low inflation, is coming to an end, it seems. So it's going to be very interesting. So we'll go over to this. This is the other article. And when I restarted my computer, I was looking and I was, none of the highlighted stuff was on there. And I was thinking, oh my God, like I've put in all these, I highlighted all this stuff in this big report that the government did. Because I had to read the whole thing and highlight the little bits we wanted to see. And I was just like, I do not want to have to read. I was already late and I was like, I don't want to read that. I restarted the browser and then it came back. Magic. Canadians are packing up and leaving at a fast rate during a traditionally slow period, Statistics Canada data shows. Emigration, the act of leaving permanently, jumped in 2021. The past year showed modest gains, rising to the highest level in half a decade. The fourth quarter is what sticks out, though, showing a sudden acceleration. Canada saw the largest Q4 volumes of residents leaving since the 1970s. And isn't that interesting? Because that's when inflation was extremely high. So the trends don't change. The patterns stay the same. But you know what's interesting? Just a quick disclaimer about emigration before we get into it. You're going to see these numbers and you're going to think, well, they're really low. But you have to remember that a lot of people don't actually sever ties. And what I mean by that is a lot of people will say, wow, you know what, we'll rent out the house. Because, that's happened a couple of times when we've been looking around rental properties here in Calgary. They've said, oh, the landlord moved to America or they moved to Dubai or whatever. And they're renting out the house. So they didn't sell it. So they don't count in these statistics. So you have to remember there's a high proportion of people that don't count in these statistics. And Canada actually applies this exit tax, believe it or not, to people leaving. It's absolutely hilarious. But so people also don't do anything because they don't want to be hit with that sometimes. So it's kind of, there's a lot of fiddling, I think, that people must do going to places like Dubai, because if when we move, we're going to do things properly and just sever ties with Canada so that we can take advantage of that low tax. Whereas if I just went to Dubai and I had a rental property in Canada, essentially, because there's no tax in Dubai on income, they would want me to pay tax here in Canada. So unless you axe yourself, you say you're not a resident and you sever ties and you have to show that you've severed ties by getting rid of properties and stuff like that. It's not as easy as you think. Like, you can just have a house here. That's why we're never going to buy a place here. You got to be kidding me. Like, it's like a lead weight dragging the ship down to the bottom where the Titanic is. But yeah, it's just kind of insane that they do that. So yeah, just bear that in mind when we go through these. Canadian residents had the largest outflow since the 1970s. Canadians left the country at a swift pace. In a quarter they usually don't plan a move. StatCan estimates 16,901 immigrants in Q4 2021, up 215% from a year before. I'm sure that's kind of messed up because of the cerveza sickness and all the mandates and the restrictions. So take that percentage number with a grain of salt. Annual growth doesn't mean much due. Oh yeah, there you go. Annual growth doesn't mean much due to the outbreak's base effect. Don't let the distortion allow you to dismiss the whole trend, though. So there you go. And then it shows a chart of exactly what's happened. So here you have going back to 1970s, and you can see that actually, funnily enough, it's been fairly low as measured, but creeping upwards. Then obviously during 2020, it went down very significantly. Some would argue that this is just going up because of the pent-up demand of people leaving, but I don't think so. That's a massive spike upwards, way above. I mean, if you think about it, we should have gone to about here where the mouse is if it was just a normal, but we went way up here above the historic trend. So it's going to be very interesting to see how that goes. Looking at the longer term, this was a huge fourth quarter. The Q4 emigration was still 55.7% higher than the 5-year median. So there you go. It's important to understand this doesn't mean Canada's population isn't growing. The country's population is aggressively increasing due to higher immigration. For every person that leaves, Canada has managed to attract several more, unless you're only trying to balance your tax revenues, net growth, while ignoring rising outflows isn't a positive. Just looking for much warmer weather. Yeah, I don't blame them for that. I don't blame them. You guys who know me know that I cannot stand the weather. and I come from England, but yeah, we won't get into that. I could be talking for hours on that. So however, a structural problem forms if the outflow is due to expensive housing or eroding economic opportunity. In the short term, immigration can patch over the loss of people if they're leaving for a reason, though. Immigrants take a wider look at their options. So yeah, I mean, obviously population is still growing, but the massive amount of immigrants that they take in really is just to patch over the low birth rate, which we're going to go through right now. So let me bring you into the government's website, and we'll roll through this. So this was actually released December 2021. It's on Statistics Canada's website. So the government actually admits this. So changes in fertility intentions in response to the cerveza sickness. Release date, December 1st, 2021. So let's dig down here and see what I've highlighted. So you can see, you just can't not laugh when you read the government saying stuff like this. And then you're like, so you know this is an issue, you do nothing about it though. And that's really the facade that they create, the Ponzi scheme. Canada is a low fertility country whose fertility rate has been steadily declining since 2008. Why since 2008? Because it's been a stagflationary period, essentially. Maybe. just thinking about that. So think about what it's going to be like after this. It's going to be unable to hide it, basically. Also, in 2020, Canada experienced the lowest number of births and greatest year of over-year decreases in birth, 3.6% since 2006, a trend similar to several from other countries. Yeah. So, and also a lot of people would have thought that everybody being locked together, there would have been some kind of baby boom, actually, wouldn't you have thought? But it's actually the complete opposite. And obviously there's been a lot of separations and everything like that, because when people have spent time together, they've actually realized, hey, I don't like this person. It's just so funny. You gotta laugh, otherwise what you're gonna do, cry? Yeah. Canada could join the lowest low fertility countries, a situation associated with rapid population aging and increased stress on the labor market, public health care, and pension systems. And they highlight something very incredible there, which I wanted to talk about in another stream, and we will, is pension outflows. And I'm going to get Hilliard on here. He's agreed to come on here, and I actually forgot until now, but I'll have to organize a date, because Hilliard has a greater understanding of this side of the equation than anybody else, which is the pension outflows that are going to come over the next couple of years. Not next couple of years, next couple of decades, is really going to hurt a lot of these pension funds, because they're not getting the inflows of cash. Like, less and less people are contributing to pension funds now because nobody has any money, because the economy is just a Ponzi scheme. And essentially everybody's just trying to max their payment out for their mortgage. And it's got to the point now where it's got so far maxed that it's going to go the opposite way in terms of defaults and everything like that. So it's interesting. But basically, Canada joining the lowest low fertility countries, that's not a good title to have. And that basically tells you the story of what a country is like if you look at their birth rate. Because, you know, if their birth rate is fairly high, now it can be cultural as well, but if you look around different countries, you'll see that generally people where they're having children, it's because they believe there's a future for those children to grow up, become their own person, and actually live a decent life. Now, if you're looking, thinking, I'm never going to be able to afford a house, I'm never going to be able to afford anything, so how on earth could I bring a kid into this world? Then that is very different. And I think that's a big pain that a lot of people share across Canada. I think there's a lot of people that would like to have children and just aren't, because of the economic pressure, essentially, and the stagflationary pressures that have been happening since 2008, because that's really when everything changed in Canada. And Canada, instead of being more prudent with lending, just said, we will lend to everybody, and everybody can just get in as much debt as possible and nothing can go wrong. Everything will be fine. Don't worry about it. And here we are, 2022, and the tables have reversed now. So it's like you're starting to see a rate hiking cycle on the back of rapidly high inflation, the start of an inflationary cycle, which will see disinflation, inflation. That's when inflation comes back down. It doesn't go down. Prices don't come down. It just means the increases get slower. We will see that. We'll see disinflation, and then we'll see more inflation, and it's going to go like that. And I think the East, countries like India, China, are now looking at places like Canada, the United States, and thinking, we don't want to fund it. We don't want to fund it anymore. We don't want to fund your extravagant lifestyles, because that's what they've essentially been doing. The whole system is propped up on these other countries buying bonds and propping up by buying the debt. And that's the thing. It's starting to reverse right now. We're seeing that bond market collapse. It's just, nobody is talking about it. And I just find it hilarious. We've had $2.8 trillion wiped out over the past month, and nobody is talking about that. Like, the bond market is way bigger than the stock market. And trust me, if that's happening in the bond market, that will ripple into the stock market at some point. And we'll get into the stock market because there's a little thing I want to play by you. And then we'll wrap it up. And then the next live stream will be in England because I'm leaving tomorrow, flying out tomorrow to England. So it'll be good to get back there, see family and such. So these population level indicators cannot in isolation pinpoint the precise magnitude or the potential duration of this impact. Indeed, it could be argued that 2020's lower fertility rate may simply reflect the continuation of long-standing trends. So yeah, and I think that was really it. There was a load of other stuff in here that was, charts, and there's so much stuff in here, and I just, so much of it, I don't think I had anything else that was, no, okay. So that is that. So you basically seen the fact that now we are at a turning point for a lot of things right now. And it's a turning point that I just think cannot be ignored. You can't ignore this. Like, these long-term trends, these are the long-term trends that are going to affect people over that long duration. So even if, like, let's say that there's a housing, like the housing market crashes, let's say it goes down 50% or something like that, just throwing a number out there. But let's say it goes down 50%, and then over the next 10 years, it goes down 4% a year. Like, that's a lot. That's a lot, and that's a lot of pain as well for the households and people's wealth and everything like that. So, like, yeah, I honestly believe in my heart that the trends of the past 20 years are over. Like, we are at a turning point now. So it is kind of insane. So one thing I wanted to show you guys, we're talking about trends and everything that happens in the past, is basically, I was looking earlier, and I always kind of do this, and basically I tweeted it out. Actually, maybe I should go to the Twitter because it's probably better on here. So, okay, yeah, it is better on here. So, because I've actually put something. So basically, if you look at this is basically what I've written here, and this is a chart of the NASDAQ right now. So obviously the NASDAQ has been going up on a storm. And basically I was thinking, I wonder what happened at the start of the .com crash, because this has been so, for tech, this has been so similar to the .com crash, especially when you look at these hyper valuations like Tesla, many other companies that have enjoyed hyper valuations for, like, just these mega cap companies for the past 10, 20 years. And some of them not even that long. Like, Tesla was just a darling of the 2020s, but the 2020 bubble, that goes to show you how big that is. But if you look at this, so I put history possibly repeats, possible pattern lining up on the NASDAQ with the 2000 .com bubble. Similar time frames. The NASDAQ sell-off in the 2000s started in February, done by May, up until August. Then that was the end, knife catching contest. So basically you had, and I'll show you. So, and I basically put 1, 2, 3, 4. So what you've got here is basically, this is the NASDAQ, and this is 2000 to 2001. So this is when the .com bubble crashed. And if you look at what happened, we see a similar pattern actually, because you had this up here, and then you had like shoulder or this retracement here that you can see. And then it went up to the high, the massive high, and then it came back down quite fast. And that's what we've had recently. And now it's storming up. So basically, you can see on the other chart that if I go back to this chart, you've essentially got the same thing here. So you've got that retracement, then it goes to the top here, then it comes back down all the way pretty much in a straight line in this big trend, very harsh sell-off. And then it's going to come back maybe. Well, it has come back up here. And then I'm thinking like it may retrace around this support level where I've put this arrow. It could happen above, it could happen below, depending on many different things. And then go up. And then literally, if you look at the NASDAQ in 2000, it hit this other level here and then basically just crashed from that level. So in the NASDAQ today, that level would actually be, if you look at it, right here where this yellow line is. So essentially around this 15,700 mark. So could we be seeing a similar pattern to 2000, the dot-com bubble? Because it certainly looks like it when you look at the chart. And you don't see history doesn't repeat itself, but it often rhymes. That's what people say. So I'm not saying it's going to be an exact representation of what happened in 2000. But there are some similarities between the pattern that we've had right now and 2000, which is incredibly interesting. And it's like we say, you know, you look at this chart here and you're probably thinking it just looks like red bars and green bars to me. But this is really a pattern of humans, human behavior. It's a behavioral pattern, even though it's price candles. It's a behavioral pattern on a chart, and that's really how I see it. But it's going to be incredibly interesting to see what happens. So it's kind of insane. Happy travels to England. Do some good videos. Yeah, I will be doing some videos there. I'll be doing some live streams, but I have no idea what the internet is going to be like. I know my parents, they've got fairly decent internet, but it's not like here. It's so we'll see how that goes anyway. But I might use the webcam in my laptop, which should help because this is like a 4K camera. So this probably uses a lot more data. But yeah, it's very true. So I think it's kind of crazy that these patterns are lining up, but it's very interesting. And we'll just touch on the bond market briefly, basically, because it's interesting. We got to keep checking in. Now, it was bound to have a pullback, which it did today. Well, it was barely a pullback. It just kind of flattened out. So if you look at where's Canada's bonds, so if you look at the 1 year, that carried on going up 4 basis points, 2 year just flat, the 5 year down 2 basis points, 10 year down 4 basis points. But look at this, guys. So you've got inversion here between the 10 and the 30. You're now getting more on a 10 than you are on a 30. So that is a 90% probability that there's going to be a recession. And if the 2 year inverts and the 5 year as well, it looks like the 5 year is racing behind. It's like literally a couple of basis points away from the 30 year. It just means there's even more chance of that recession coming. So this is 90% of the 90% chance, essentially. So this is really something to keep watching. Kowson, thank you so much for the super chat, buddy. You don't have to keep sending them. I think you sent like 2 or 3, but I appreciate them. Thank you very much. Great topic. Unrelated, I just checked the US 2-year Treasury, 2.409 and 10-year 2.47. Yeah, so I've got the US Treasuries right here. I got New Zealand as well. So I haven't really looked at New Zealand, but they don't have a 30-year. Well, I couldn't find it anyway. So it was more difficult. We've only got like a 10-year. Australia, I couldn't find the 30-year for that either. But here's the US Treasury. So they were up. The 2-year up 7 basis points. Wow. So yeah, the 2-year is up 7 basis points, screaming to catch up with the 30-year. Holy moly. Yeah, thank you for pointing that out, Calson. Yeah, look at this, guys. So the 2-year is literally 14 basis points now away from the 30-year, and it's literally set 6 basis points away from the 10-year. So like the treasury yield has inverted. If you look at the 5-year here, it is inverted because you've got that at 2.58, and then you've got this one right here at 2.479%. Now, for everybody who's listening, and thank you again, buddy, for that super chat. So for anybody who's listening, basically all this is you're buying government debt. So let's say you buy $100, $100 bond on the 5-year. So if you buy a 5-year $100 bond, it means you're going to get 2.58% on that $100 over 5 years. Now, the thing to note about this is basically that it's fixed. So a lot of pension funds buy these. That's why they're called fixed income. But a lot of pension funds buy these. So if the bonds sell off, not only are you getting less of a yield, that like if you want to sell that bond back to the market, it's worth less. So you're you're hit twice essentially. And remember, bonds are the safe, well, they're meant to be the safe haven. And I got to say that Peter Schiff has been spot on with this, because he's been saying for the past year, I've been listening to his podcast, and he's been saying the bonds are going down, the bonds are going down. And even I reported this back in September, I think it was, or October. I did a video about Michael Burry's prediction, which was that we were going to have bond yields exploding and a massive bond market implosion. And here we are right now. So it's just insane. I mean, the 30-year barely moved. If you look at the 30-year, it didn't even move 1 basis point. And then you've got these are all moving up. The 2-year note up 3.6 basis points. I mean, this is just absolutely insane. I'm surprised actually that the Canada bonds are pulling back a little bit if the treasuries are up like that. Usually they just follow each other, but I think they're just pulling back because Canada was at record highs, whereas the US wasn't at record highs for a lot of their treasury notes. But essentially, I hope I explained that bond market to you in a way that you can understand. Essentially, a bond is you buying somebody's debt. In this case, it's the government's debt. And then they give you a fixed return, which is like if you're getting a 5-year, it's a 2.58% over 5 years. So you get that every year. Every year. And basically, that is obviously, if it sells off, the bond sells off, then you want to sell that bond for some reason. Maybe you see another opportunity in something else and you want to buy that. Then you're at a loss for the bond and also the yield, because you lost out there too. So the interesting thing, guys, is BlackRock is a massive pension fund, and they own tons of fixed income assets. They own so much bonds, corporate bonds, junk bonds, government bonds, all this stuff. So they are staring down the pipe at hundreds of billions of dollars in losses right now. And they were buying lots of real estate in the United States. So it's going to be pretty obvious that they're going to be selling that, because the yield on like a rental property in the United States, you're probably getting like 3, 4, 5% yield on that, where they might be soon buying a US Treasury that is yielding 3, 4, 5%. Because I don't know, guys, we could see yields go to 4, 5% because it's just absolutely, I don't see how they're going to prop up this market. And I think a lot of outflows are coming out. So I don't mean to ask ignorant questions, but I'll go for it. No question is ignorant. Don't worry about it. What's your opinion on Canadian oil development in the near short term? I'm trying to play oil stocks like CPG. I mean, I only know, so like I'm no expert on this and I can't give you financial advice, but all I can say is from what I've seen from the data and what I see from the government, as in the federal government, I just don't see it like a place I would invest right now. That's me personally. I utility companies are different. Like I do own Atco, is one of them, and a couple of others. But yeah, so Fortis, that's the other one. But yeah, the thing is, like, I wouldn't buy at these insane prices like I bought before we had all this bull market, like back in 20, I guess the end of 2020, it would have been when I was buying those. But yeah, the Canadian oil sector is really under pressure because it's just not getting the financing. And you have to think that if the bond market is selling off like this, that's a problem, because that means again they're going to struggle to find liquidity. Every company is going to struggle to find liquidity. When the bond market becomes illiquid, you got big problems. And believe me, we haven't seen any of the fireworks that we're going to see over the next couple of years as of the result of just what's happened over the past month, because the damage that that's caused to pensions, to businesses that are now staring down the pipe at like hundreds of millions of dollars in extra interest that they're going to have to pay over the past 6 months, is just going to make it insane. So it really depends, because obviously there are other places where there's less regulation, less red tape, and that's why you see a lot of different people, I think, going over to Venezuela, and they're doing exploration down there, and that's where a lot of the companies are now exploring, is just because there's less red tape down there, the costs are lower, you don't have the federal government breathing down your neck going, oh, we want to go net zero. Like, we all know that's not the case, but I would have said I would have been more bullish on the oil sector if we just hadn't have had this stuff happen with Trudeau and Jagmeet. But now those two clowns are going to be in charge for the next possibly 3 years. Like, I mean, I don't see it getting any better. I just see it getting worse, because, I mean, Jagmeet does not have a clue about economics, and he he has already said different things about the oil industry that would put you on edge. So the interesting thing about the GDP numbers as well is it's been showing that the oil industry is contracting. And what I keep thinking when I read about these contractions in the GDP numbers, I'm thinking about, this is, number one, these numbers are fake, because the deflators they're using for inflation, like they basically adjust it for inflation, but obviously inflation is running way higher than they're saying it is. So actually the GDP contraction is way worse. So we are actually in a recession right now, even though they're posting like these GDP numbers that are record. It's because the inflation number is false. All these numbers, unemployment, GDP, they're all false, but they give you a base idea of trends, like the difference between months and such. So I find it interesting that that's contracting, because it's all at a time when you would have thought it would have been expanding. And, you know, the agricultural industry, again, is in a complete mess, because, like, there's a drought here in Alberta and Saskatchewan. There's a really bad drought. There's just so many problems that are hitting Canada. So I think a lot of people are speculating on the fact of agriculture and everything, but they're not really looking at what's going on. It's all just a speculation. So I don't know. It could be, it could not be. It really depends how this dictatorship goes over the next so long. So thanks for that question, though. The longest government bond I can find is the 2033 at 3.5. Yeah, that's the longest one I can find as well, David. I don't know why they don't do a 30-year. So it's kind of David, did New Zealand, did Auckland go down 20% or something in price? I read somewhere. I swear I came across some article that Auckland prices dropped 20% or something like that, or they've dropped 20% now. Can't remember what that was, but let us know. I'm sure you'll know about it. I think we are still in a phony war zone. I'm expecting it to collapse later this year. Most people buy the pundit story about a modest decline, then stabilization, followed by a renewed rise. Yeah, that's very true, David. You're very wise to say something like that, because that is, I think that's just what people want to believe. Like, let's face it, guys, we're all human, and at some degree, at some level, we want to be optimistic about the future. And sometimes even I kind of get in a rut because I'm a realist and I just see things how they are, and I just don't see the light where I am, and it makes me want to leave. And you go where you're treated best, and everything like that. So it kind of drags me down sometimes. But I think as humans, we're always trying to look on the bright side a little bit, even in certain situations where we shouldn't be. We should actually be way more cautious. And people just haven't been cautious over the past 2 years. Like, they have been the opposite of cautious. You've seen incredible government stimulus come in. You've seen all this different stuff that has happened with the economy and basically expanding the credit supply. It's not even the money supply. It's just the credit supply. That's all we've seen expand over the past 2 years, is just credit. It's a credit supply, not a money supply anymore. We're a debtor economy. We don't produce anything anymore. Most of the goods that you and I buy all come from China, our phones, our computers, everything. And the fact is, we don't control the price of those. And even the things that Canada does export, like oil, they don't control the price of that either, because that's controlled by a market, the world market. So it's kind of funny, really, because Canada is just completely at the whim of markets and essentially external influences to inflation, just like the United States. So even when Canada posts surpluses, I don't even look at that, because I just kind of think, well, yeah, but we don't control, and those things indirectly affect us. So yeah, we're exporting more oil at a higher price. However, we're having to pay higher energy costs, and that's affecting the economy there. So it's like push, pull, push, pull. Like you just end up the same. There's no benefit to it. So it's kind of funny. I'm in New Zealand. We got 2 people in New Zealand in the house. Nice. And outrageous. People are looking to leave. Yeah, so it's the same thing. What time is it in New Zealand right now? It's the morning, I'm guessing, but I wonder what time it is. 9 o'clock in the morning, something like that. But yeah, New Zealand doesn't have an economy. It's just people selling houses to each other. That's exactly like Canada, my friend, and Australia. I think they really don't have an economy besides just credit. Like, everything just comes back to credit. And I always think why we got such good deals when we lived in Toronto, paying cash for different things. It's because nobody has cash. And I only thought about this the other day. I thought, everybody, like, if you needed to pay on your credit card because you needed it to all be in credit, then yeah, you have a certain choice, but you can go get the deals if you've got cash. Cash can be a good tool to use and deploy. And the thing is, like, if you go on classified ads, everything like that, that's where you might find different bargains, things that you can sell on or recondition, or even find gold and silver that people are selling because they're in a bind. So it's 2 p.m. in New Zealand. Oh, wow, it's the afternoon. Nice. But yeah, guys, so it's completely messed up. So the next live stream will be coming from the UK. I'll be there. I leave tomorrow night around 8, I think, and then we land in the morning around noon, I think, the next day. So I get there on Wednesday. So there'll probably be a live stream on Friday as normal. And God, I might be doing it from the top of a mountain to try and get some signal. Nah, it won't be that bad. But yeah, I'll be doing the live stream from there. But I won't have two screens, so I'll have to work it. So I'm flicking across so I can definitely see all your comments and everything like that. But yeah, guys, thank you so much for watching. Trent, David, Oliver from New Zealand, David from New Zealand, Ken B in the house, Rock Girl, the Christos 68. Peter Schiff says the Fed will be turning Japanese. I really think so. Yeah, I think so as well with the Bank of Japan. Who else we got in here? Philip Clark, Benjamin Frost, Cowson. Yes, thank you for the super chat, Cowson. And yeah, I think Vladimir Lysenko, Trevor England. England's where I'm going. Greg S in the house. Silverchair in the house. RWGRSK. Anyway, guys, thank you so much for being on this live stream and always coming here. We've had a few people on tonight, and I will see you in England. Peace, guys, and I'll see you in the next one. Bye-bye.